Utilities are in this very difficult position of keeping costs low and stable. And I think this becomes a more extreme challenge in managing a system with variability in supply. I think as we see it at Ascend, the structural change in Western power markets has caused power flows to reverse, now flowing from south to north and shrinking operating margins. And it makes it more challenging to manage portfolios. And we're seeing this variability in meteorology impacting supply and now demand with more extreme weather, particularly in the summer months. From a decision-making perspective, we're going to be covering this today and understanding the link between the physical and financial and how this moves from position exposure to costs and rates and compounds the risks, making decisions all the more important to mitigate in terms of the variability of uncertainty in supply and costs.
The red and the pink and the light red is all going to go to California EDAM, whereas, the dark blue is SPP, but the other blues are likely to go to SPP or SPP plus confirmed. And so you can really see, Arizona utilities are going to be fairly islanded, whereas there's going to be a lot of fragmentation inside the Pacific Northwest. That's going to create some problems. And we'll talk a little bit about what some of those problems might be as we go through this section.
Obviously, we've talked about previously on this webinar that there's potentially a lot of volumetric risk there and volume risk or water risk, and as well as price risk. And that's going to lead to these really wide ranges of costs. So the middle chart here, this black or dark blue band of potential costs for the month could be quite wide in certain times of the year. And if we were to impose some sort of hedge on that overall cost structure, we can try to narrow that band of expected costs quite a bit.